Top of the morning, back at it again with another one, and we're looking at Twitter. If you don't know now, you know. Be sure to give us a follow at SCHMDII, and I'll just be dropping all free signals, thoughts, anything I find interesting, or just some alpha. Don't miss out. Don't miss out. Hit me up there. Let's connect and let's grow as a community. Now today, we're going to be looking at the price movement of a trade we took on Thursday, and it was fresh off the heels of the PPI and the unemployment claims numbers. We had a 30-year bond auction later on in the afternoon, but it didn't really do much. I was in and I was out. You know what I'm saying? Yeah, we're going to be looking at the Nasdaq. Let's switch over. Just a quick look-see. Core PPI came out, reduced. PPI month on month came in smaller than forecasted and way smaller than the previous month. And then our unemployment claims came out relatively good. Lower amounts of unemployment claims as was forecasted and as per the previous month, which is cool. Now let's go to our charts. We're looking at TradingView, looking at the YM, mini Dow futures, and the Nasdaq, both on the 1 hour time frame. We're going to be particularly paying attention at this price fractal here, which we rode up all the way to the top side there. And we're just going to first speak on the SMT divergence we noticed. We're going to be comparing this price swing, as you can see on the left hand side via the Dow chart, the corresponding price swing we formed. So it's that lower low that was made and then that higher low. What was that? Oh, it's the bank going crazy. Right. Now you'll notice that on the Nasdaq we're sloping up, whereas on the Dow we're sloping down. So we're just gonna note that SMT real quick. Now this gave us the confirmation or the confidence to note that this would be the low and that price wouldn't trade back to this. And that's indeed what had happened. So you notice the divergence between these two assets, they tend to move in the same direction and manner. But at times where we see a crack in correlation, it gives us an opportunity to get involved since smart money is actively trading at the time. If Nasdaq was to make a higher low, we'd expect the same to happen with the YM, but we didn't get that. We'll just take a look at the ES quickly, and you'll note, let's see, ES. We also have a divergence with the S&P as well. S&P made a lower low similar to what we saw on the Dow Jones. So we have our cracking correlation, as you can see there. We then come back to reviolate that low that was formed, and that's what gave us confidence to go ahead and enter our position. So with that context of the SMT, the cracking correlation between the three sister indices that tend to move in the same direction, we then took a closer look-see. We're gonna go to the M15. Very beautiful price run off the heels of the drop yesterday from the CPI number. Had a level of buy side there. Just gonna mark that out. So our buy side liquidity, that was our draw. This whole downward movement was acting as a, whoops, I need to stop bumping into the mic. That whole downward movement was, we looked at it on the hourly time frame, and it was acting as an order block for us. That whole downward movement. From there going to there, I'm gonna look at that as an order block. Had the order block. Go back to the M15. So we had some stops ran, some sell side, as you can see over there. And as you would know, since you watch my other videos, fair value gaps that form after price has run stops. In this particular case, the sell side liquidity. People who bought around this area would have a protective stop loss down there. And as price trades down, these stop loss orders get triggered. And we get liquidity to enter our positions. Another form of trader are breakout traders who are, once price breaks down below these lows, they'll be triggered in via sell stop. So they're selling it to us at a cheaper price. That's where we entered. If you're a turtle soup, if that's your model. I excel with continuation patterns. So this ran through the stop, displacement in the opposite direction, break of structure. That's opened up the order block, that whole downward move, and then price came back and hit that. I also want to take your attention to this. This is also within our OTE zone. On the projection fee, we didn't really quite close come to it, but we are well beneath discount or equilibrium. You're well in discount there. Hit the halfway block of the fair value gap on the M15. We didn't close past the halfway point of this block, so it gives us the indication that price is indeed bullish, and that is indeed what had happened. We had a price movement, if you're measuring from the top of the fair value gap, price movement of about 264 points to get to our target at the time. I was anticipating us getting up to there, working our way up there. So you can see these relative equal highs over there, and ultimately that level. I personally see a lot of buy-side liquidity that still needs to be attacked and purged. And we'll see perhaps in this coming week what will happen, because right now price is kind of resting above that or in that vicinity there, as you can see. Let me just do this just to give you the visual. As you can see, so perhaps we will trade up. We'll see what happens, but without straying too far away from what we are focusing on, this particular piece of price here, you note the SMT. That gives us confidence that that would be a low, especially after we ran stops, pushed back up, broke structure, price went from being bearish to now bullish, and then we returned back into that fair value gap for the entry. We triggered into that at about 10:15 silver bullet time window. Hint, hint, nudge, nudge. Let's go into the 5-minute. Even if we refine this further into that 5-minute fair value gap, outcome is still the same. Let me just refine that. As you can see, very beautiful price movement. Went up, came back down. Around about 10:15, 10:25, silver bullet time, and then we began to make our way to the upside. Very beautiful day. Very beautiful day. And it was pretty straightforward, just like that, you know. Ran stops, displacement, SMT, reversed, and then we were on our way up. Yeah, this is when the news came out. There about 8:30 time. Came out from 9:30. We just saw price dropping and then proceeded to the upside. So now we'll see what price has in store for us this coming week. Nothing crazy, pretty straightforward, and a beautiful trade. Very, very beautiful trade. Yeah, man, that's that on that one. Pretty straightforward, you know. Thank God for the knowledge we now know, and it'll be interesting to see where we will be a few years time from now. We just have to keep showing up, being present at the charts and taking advantage and not making stupid rookie mistakes, it's always a good rule of thumb to rather just let the opening range play out. So that's the first 30 minutes from when the market would open. So 9:30 in the morning up until 10, that's the opening range. And then from there, price should be pretty clear. Any inefficiencies that opened within that opening range would be a good entry point, provided that they are in line with the current daily bias. Yeah, it's just so beautiful what happens when time aligns with our PD arrays and the bias as well. Very powerful. But yeah, man, glad I could share. Very nice observation. Very clean trade as well, as opposed to the previous day on Wednesday. Wednesday, we just got that hectic price drop from when the CPI numbers came out, and then price just consolidated for a while. That's that. Wednesday, we had the price drop, 8:30. Got that spike up at 25 past, pretty interesting. Got the full dip at like 30:30, so guess they gave us a hint, this one, of like what price was gonna do. But you dropped, consolidated, built up that sell side liquidity. The next day we came up. Produced the range, built up the liquidity on both sides, took out the sell side first, spiked up, came back, and then tapped into the fair value gap and then shot up. Very beautiful trade. Very beautiful trade. But yeah, man, be sure to give us a follow on Twitter. You know what it is. Thank you all for sharing your time with us today, and hopefully we can continue to grow. If you found any value in my video or any of my other videos, please be sure to like, comment, subscribe, and please share the vid so that we can reach our other fellow traders and grow the community. Thank you all. Thank God for the skill, and stay safe.